Welcome to Mortgage Talk 101 here on SuperTalk 1270. Time to look behind the numbers. Buying, selling, refinancing. Mortgage Talk 101 addresses real issues in real estate. Now, live from the SuperTalk 1270 studios, here's Mortgage Talk 101 host, Joe Sheehan.
Your body built for radio, saddling up the stainless steel microphone of the Mortgage Network with my co-host,
Dave Floor, Mr. Housing. What's going to do? What's happening today?
I'm saddling up. What are you doing?
I'm just sitting here. Just sitting.
Just hanging out.
Just hanging out. Yep.
Right.
Jim and I are just hanging out.
All right. Well, I'm saddling up.
You're
folks.
saddling up. He's ready to go, folks. Look out.
Yeah, we do have some great stuff going on today. We're going to talk about Jamie Dimon from Chase says, "Hey, I don't like FHA lending anymore."
Oh, that's not good, really.
There's stuff about how people are paying their mortgages. We know about that. Are people paying their mortgages? We know that.
Most of them are.
Rates are doing some things.
That was an exciting day yesterday, wasn't it?
Ooh. Yeah.
Yeah.
Hold on.
Yeah. Nice jobs report and all that.
Yeah, that's not good for rates.
But that didn't do rates much.
Where do you find the hottest bankers in the country? We know if you're in the dating, if you're
not in as warm, hot, but hottest.
Hot.
Like
Hello.
in the dating sense of the word hot, right?
Nurse.
Yeah. This
banker.
was actual. Yeah. Oh, it was on Frank and Brian's show.
It's actually a tracked stat. Anyway.
Yeah.
Yeah. It's
That's a little weird.
It's for all the singles out there who are looking for a hot banker. I gotta tell you.
And folks, we'll find out if anyone from North Dakota made the list.
Yeah, exactly.
Well, it's a tease. We're teasing you here.
There we go. Okay. Well, what's going on with interest rates? Well, they are the Freddie Mac primary mortgage market survey says down from last week.
They're down.
30-year fixed-rate mortgage, 4.12% with a 0.6 discount point, and 15-year fixed-rate mortgage at 3.23 with 0.7, so slightly down. But things have changed a little bit.
They forgot to take yesterday into account.
Yeah,
and today.
Yeah, and today actually they're leveled. They've leveled off.
They level off.
Yeah, because and what we're talking about, folks, is again, remember when we give you the primary mortgage market survey data, this is an average of interest rates that have been offered all over the country for the last week.
Yep.
So clearly, at the end of last week, at the beginning of this week, interest rates doing better, lowering. But as we are going to get into the economic news, positive economic news for the markets has led to interest rates getting a little bit worse. Looked like they were going to get a lot worse yesterday. They wound up ending not too bad.
Like an eighth. If you hadn't locked in on, say, Tuesday, and boy, you came back Wednesday, oh my gosh, your rate would have been at, what, eighth of a point higher?
Yeah, it could have been eighth to a quarter higher depending on what your factors are. So, and that is one of the reasons why we talk about this on the radio shows, because we never want someone to be surprised where they talk to their lender at 1 o'clock the day before and they say, okay, well, what's my rate? Well, let's say my rate's 4.5, and you go, well, let's think about it overnight. Well, then you wake up the next morning and you call your lender back and say, okay, we'll take that 4.5 rate, and you find out, oh no, it's not available anymore.
It's 4 5/8.
It's 4.625 or 4 3/4 or whatever.
Because yesterday, actually, the news came out right away in the morning on the jobs stuff, and the rate sheets. From what I understand, the rate sheets were up before the market even really got started that day.
Yep.
Yeah.
Yep. And now today, good news for interest rates is that the Dow at about 10:59, the Dow is down about 190 points because of default on Argentina, Ukraine, and plus the Mideast tensions. So, so there's the good news for interest rates today.
Bad news in the rest of the world.
I always love how interest rates. It's like, as long as there's some sort of calamity somewhere, interest rates like it.
We're bouncing around. Yeah.
Yeah, it's a.
We get positive economic news here, which is actually, it's good because you want to see people going back to work and everything. So that was all good, and housing, it was got a good report, etc. But then that lasts only so long, and then if something else happens somewhere else, boom, you're back to where you were.
There's so many house of cards out there still that can wreck the day for the economy. Yeah. And so here was the good news, and this is from this morning's Mortgage Market Guide. A hint of wage-based inflation is pushing the bond markets lower, which just basically means it's just a hint of wage-based inflation is pushing rates higher. Mm-hmm. The Labor Department reported today that employment cost index rose by 0.7%, so better than expected. in the second quarter, the fastest pace since the fall of 2008, due mainly to higher retirement and healthcare costs, so expect that trend to continue. In addition, wages, which are 70% of employment costs, rose by 6%, its biggest increase in the third quarter of 2008. So although this is bad news for companies maybe, because
wage inflation.
Yeah,
Okay.
wage inflation.
Okay.
But it's good news for consumer spending,
Yeah.
which has been something that's been missing in the economy. So Americans filing for first-time unemployment benefits rose by 23,000 in the latest week to 302, below the 310 expected. However, the previous week was revised lower to 279. So the people filing for unemployment, that's getting better and better and better, or lower and lower. And Housing News CoreLogic reported there were 49,000 completed foreclosures in June, down from 53,000 in last June. Okay. So everywhere you look, there's more and more softening of the negative.
Little positive steps.
Positive steps. Lower unemployment claims, higher. Employers are having to start to pay a little bit more to their employees,
people, yeah.
which is good for consumer spending. And the housing report is that there's less and less foreclosures out there, which means, hey, foreclosures sell for less money. And so until the foreclosure inventory gets completely liquidated out to normal levels, it's going to take that before you're going to start seeing people move back to new construction and start seeing increases in house prices.
That number was foreclosure sales or foreclosures completed?
Completed.
Okay, so now those homes will be coming on the market.
They'll be coming on the market, but there's less this year than there were last year coming on the market. So there's less foreclosure supply coming into the market to compete against existing and new sales.
So theoretically,
should be better.
Yeah.
So here's the advice of as we roll into the first break, and then we'll get back and we'll talk about where you can find the hottest bankers in the country, if that's how you choose your banker.
Yeah.
This week has been volatile given the economic data, the Fed statement, and the geopolitical headlines. But the big event of the week is tomorrow's July jobs report, where it is expected that employers added 220,000 new workers in both the private and public sector, down from the June reading of 288,000. The number is very likely to meet expectations, though, which is about average amount of jobs being created in 2014. So after that, what they are basically saying here at Mortgage Market Guide is stay close to your lender. Be ready to lock. So what we're going to tell you is if you like the rate you got, lock it.
Yeah.
If you like the payment you've got, lock it.
Yeah.
So they think there could be some improvement. But
the market's kind of priced in that we'll meet it's going to meet the estimated jobs that are going to be created. So if that number comes in higher or lower than that estimate, then you're going to have rates go one way or the other. Yeah.
Advise new clients to float for now, but if bonds move lower and close beneath the aforementioned support, be ready to lock.
So, all right. Okay.
It's
Santana Day. On Mortgage Talk 101.
Perfect music to go into the next segment talking about the hottest lenders in the country.
Right now it's 72.
Get the traffic and weather information you need anytime on SuperTalk 1270 and online at supertalk1270.com.
Woo!
Everybody's everything.
Okay. Well,
all right.
Welcome back to Mortgage Talk 101, where we are going to talk about the French housing meltdown. We're going to talk about how Jamie Dimon, the head of Chase, says no more FHA. Take your FHA and stuff it. But right now we're going to talk about if you are in the market for a hot banker.
Choosing a banker.
Where will you find the hottest bankers in the country?
Where is it, Joe?
Survey says Goldman Sachs.
And this is from Hinge.
Hinge.com.
Is a dating site,
Is this
right?
a dating site? Yeah.
I think it's a dating site.
Now, we got this from Frank and Brian.
Yeah, National Real Estate Post.
Yeah, you want to go to the National Real Estate Post and see the actual video, go to nationalrealestatepost.com. Frank and Brian
They got
reporting.
charts and everything.
Oh, there's stats all over the place on this.
Yeah.
And not only are the Goldman Sachs bankers the hottest bankers on the planet, they're hotter by 15.8%.
Yeah.
15.8.
Yeah.
That's where I marveled was at the 0.8.
I wonder if there was a management decision or something, say everybody get on there, and then everybody mark down that everybody at Goldman Sachs is the hottest bankers, so they could be the top on this.
So do you think how do you think that went over at HR when management sent out every single banker in the company has to get on Hinge.com and go out there and get themselves
probably didn't go over too well.
Yeah.
So
hopefully that didn't happen.
I don't think that happened.
Now, there were some other stats in here. You remembered some of the other more obscure details about this.
Who was picky in their dating choices? The pickiest was Barclays Bank, which is a European. They're English, right?
Yeah. So if you're on Hinge.com and you're looking for a hot banker and they're from Barclays, you better have your game on.
Yeah. Well, no, they're not very picky.
Oh, they're not very picky.
They're not. They were the least
door's
picky.
Wide open.
Yeah.
Okay.
They're the least picky. I think Goldman was actually the pickiest also.
So if there's some way to
you got a good chance if you
find a Barclays.
If you hook up with somebody from Barclays, it's a good chance.
So
if
you find a hot banker from Barclays,
you're going to have a date.
You're going to have to cross the pond, so to speak.
Yeah, you're going to have a date. Well, they got offices here.
Oh, do they?
In the United States, yeah.
Okay.
Goldman Sachs, it's going to be tougher to get a date.
So who's the pickiest? Was Goldman Sachs
Goldman Sachs, I think, was the pickiest.
Well, they're the hottest.
Yeah, they could be.
So they're
they
the gold
can be.
Standard.
Yeah, yeah. Now, did anyone from North Dakota make that list?
Nobody in this room.
Nobody in this room. No.
In this studio.
Okay.
Not even close. I don't think.
Okay.
No, because Wells Fargo was actually.
They weren't even on the list.
They weren't even on the list.
Yeah.
Yeah.
Yeah. One of the big.
And so that would be one of the big ones in town that
yeah.
you'd think. I mean, my guess is they didn't survey Cornerstone Bank or Dakota Community or
probably not.
I'm sure that
you have to go back and ask if anybody's on Hinge at your office.
At my office. Yeah. I'm going to send out the mass email. Could anybody who's on Hinge let me know?
Yeah.
By the way, you may be
voting.
You may be being ranked as we speak as to whether or not you're worth dating as a banker or not.
Yeah.
And here's the deal: as a profession, wasn't there also something about how bankers ranked as a profession on the site?
Oh, that I don't remember.
Oh, okay.
Yeah.
But do you think of bankers in general as like a
Is a place to go get dates?
Yeah. No.
No.
This is kind of like going. You know what? We'd like to get some. I'd really like to go out and I'd like to really have a nice meal. Here's a box of crackers.
This is like just there's too much information out there.
This
is one of the things that there's just too much. Now, did we really need to know that Lehman Brothers has the hottest bankers?
You mean Goldman Sachs?
Or Goldman Sachs, I mean. Lehman's, they're done.
Well,
some of them probably work at Goldman's now. But,
Lehman Brothers might be the metaphorical or proverbial version of the prostitute that got busted and put on.
There she go. Yeah, exactly.
And is no longer available to be dated.
Yeah.
But put out of business.
This is just too much information. We have too much information nowadays. Because they had charts. There's charts out there, folks.
They're
bar charts.
Well, when you know who the pickiest is, and that the most attractive is the most attractive by 15.8%.
Yeah.
I mean, so now you know right now that there's someone in New York City who thinks that they are currently too good to work for Barclays and they are trying to get a job at Goldman Sachs.
There you go. Yeah.
Because they are way too hot for Barclays.
Yeah.
You know why you should never kiss a girl at a bank?
No, I don't.
She's a teller.
Oh, good one. Bank humor this morning.
Remember that.
Yeah.
Right. And that's the best jokes we got. So like I was saying.
That's the best the banker can come up with.
That's the best jokes we got about us. So what I'm saying is.
That's not going to go over well on the dating site.
Let's just say, reaching out to the hottest bankers, you still might find that a little, let's say, dry.
Yeah. Okay. Well, that's enough.
Why would we cover that? Why would we talk about that here? Frivolity. Because it's
silly.
It is silly.
Yeah.
And I can't wait to find. And you know that there is someone out there who right now is considering opening up an account at Goldman Sachs.
Oh, I'm sure there is. They've seen this report. Well, I'm going in. I'm going to check it out.
Mm-hmm.
Yep.
Okay.
No, we're going to talk about the French.
Yes, this is you. You lead the way.
Oh,
here.
okay. This is me. Okay, this comes from a guy. It's called Zero Hedge. This guy has way too much time on his hands. His name is Tyler Durden, but he posts stuff like round the clock. I think 24/7. But they're talking about the French housing meltdown. It's in total meltdown. Housing starts fell 19% in the second quarter from a year earlier, and permits, a gauge of future construction, dropped 13%. The reason, there is a law that they passed this year in France that seeks to make housing more affordable by capping rents in expensive neighborhoods. To protect home buyers, the law also boosted the number of documents that must be provided by sellers, leading to a decline in home sales and longer transaction times. This sounds familiar to some things I've heard lately around here, Joe. Capping rents, rent control. I mean, I understand what the thought process here in Western North Dakota. Rents are expensive,
especially in some markets.
Yep, but capping rents, not sure that's really the thing to do.
Here's your little experiment on how that works.
How that works, and then the law also boosted the number of documents that must be provided by home sellers, leading to a decline in home sales, because it takes longer to sell your home, etc. We're going through that right now. There's more and more documents being added to the whole process,
but don't worry, because we're going to revise all that in August of 2015.
Oh, are we?
Yeah, where we're going to make those documents even more hideous.
No,
I don't know if they will be or not.
We don't know. There's going to be new disclosures.
I've seen drafts of them. They look okay, but it just anytime you change stuff, it just who knows.
Yeah.
So,
well, we changed them. The same, basically, documents doing the same thing were changed, 4 years ago?
Yeah, and that was a hideous change.
And now they're redoing them again.
Yeah.
Yeah.
Because the first change was a hideous change.
Yeah. Okay. So hopefully the CFPB might get it right. No. And the other thing that's interesting, we're going to talk about Chase later and them getting out of FHA lending. But the other thing I found interesting about them, this goes back to Frank Dodd, who everyone hates, and Dodd-Frank, who we all love. Okay. They're adding 3,000 compliance officers, folks, this year. That's on top of the 7,000 they hired last year.
So 10,000 in 2 years.
10,000 for just handle compliance. And Chase is a huge organization.
And last time I checked, compliance is really profitable.
Yeah. So but overall, they're going to reduce their headcount by $5,000 company-wide. So they're adding, in the last year now, in the last 2 years, they will add 10,000 compliance people, but reduce their overall headcount by 5,000.
So they're going to get rid of 15,000.
Basically. Okay. And you're replacing people that produce no revenue on the compliance side, and you're putting them in and getting rid of the people who maybe contribute revenue by bringing customers in, et cetera. And that's kind of what the French are running into right now and what's happening over there. So we can look to the French here, I think, for a little lesson.
Look to the French.
They're teaching us again.
This is what do they call this on Fox News when the headline comes up every time? Boom. Do they call it like the Bully Bay's meltdown?
I suppose, Bully Bay's meltdown. I don't speak French, so I don't know all these terms. Yeah. Jim had a year of French.
Did you have a whole year of French or something like that?
I had 1 year of French in high school.
Give us a term that we wouldn't. Nobody's going to know. But it sounds cool.
What would Fox News call this meltdown on their update every hour on the hour?
They would. I don't know what's French for. It's all Obama's fault. Le Obama, whatever.
There we go. All right, okay. That would be if there was a word, that would be it.
So is it Le Obama or just Lobama? I don't know.
So anyway,
not La Bamba, but Lo Obama.
That's just this kid from Montana. They'll turn it into La Bamba.
So anyway, the French are teaching us a lesson here in what not to do, I think.
They are,
which they're really good at.
C'est la vie.
Teaching us what not to do.
All the time.
All the time. We just have to pay attention.
Just pay attention.
C'est si bon. Lovers say that in France.
C'est si bon?
C'est si bon.
C'est si bon.
Yeah.
Okay. What does that mean?
That means, oh, so good. It's an old song.
Oh,
Conway
okay.
Twitty did a version of it.
Conway
C'est
Twitty.
bon.
Well, you have famous French artist right there.
And Chuck
and you know
Berry
what?
did C'est la vie, say the old
yes,
folks.
he
It
did.
goes to show
Yeah.
you never can tell.
Yeah.
Yeah.
There you go.
There we go. That's the only things we should do in French.
Yes, absolutely.
And the Beatles with Michelle with whatever it was that McCartney said.
Yes. He sang that at his concert in Fargo.
Oh, cool.
He did the French, yeah.
All right. Well, when we come back after the break, we've got By the Numbers. We've got the CFPB complaint. Some more complaints about higher costs. Jamie Dimon doesn't like FHA. And we got a question about contract for deeds.
Oh, that's a good one.
So there we go. Look after the break.
I'm Weather Eye meteorologist Sam Donisky on Super Talk 1270. Right now it's 72.
Your news leader, weeknights at 6 and 10. Super Talk 1270.
You know, you forget how much he's contributed to this kind of background.
Carlos, oh, yeah.
Yeah, I mean, just
It makes-
how much you hear this music in the background of movies, commercials.
Yeah.
When you're in a store walking around and it's being piped, the elevator
Yeah.
music. The other one who's very much like that is Ted Nugent. Is that he doesn't have records and records and records of great songs,
Yeah.
but he has great riffs in
Oh,
songs.
okay, yeah, okay.
And there's all kinds of times where you're listening to a commercial, listening to background music, listening to something, and guess what? It's Ted Nugent's.
Yeah.
It's
But
a
Carlos
riff-
doesn't have the political baggage.
Well, it's just musically speaking.
Yeah.
Musically speaking,
Carlos,
there's-
you hear it, and that's Carlos Santana.
Yeah.
If you pay attention to music at all, I mean, he's immediately identifiable.
Yeah,
as him.
even in his collaborations, like Smooth with Rob Thomas, which was
Yeah.
a huge hit here about a decade ago.
It's Carlos.
You just know right away that that's a Santana song, even though it's,
And the one with the girl he did. The
is that shit?
little bit of this, little bit of that.
Oh yeah. Michelle Branch, right?
Michelle
Right,
Branch.
Michelle
Yeah,
Branch. Yep.
yeah.
Yep. Yeah, you just instantly know.
Yeah. He's
It's-
playing in
it's Santana.
Minneapolis. Very odd combination: Rod Stewart and Carlos Santana.
That is a very odd
That
combination.
is okay. Anyway, Mortgage Talk 101.
Okay, yeah.
It's not Music Talk
Something we
101.
do. Well, or it could be.
Well, it could be. We like music here.
It could be.
Let's get back to Mortgage Talk 101.
Let's see.
What are we going to start with? We want to start with the CFPB or
Yeah, let's go ahead. Let's go ahead.
Okay, CFPB. All right.
Plan invites abuses, assures higher costs.
Yeah.
We were talking about this last week to a degree.
Yeah.
For sure, higher costs in terms of the CFPB's building. How much is that renovation?
Oh, 200 and some million.
That's all.
Yeah. That's all. It was started out at about 100. So it's about doubled. But anyway.
Last week, the Consumer Financial Protection Bureau set forth a new proposal to make all complaints public and sort them by subject and lender. In
Yep.
addition, the lender's response would also be public.
Okay.
It would be up to the borrower to control whether the complaint would be publicized or remain confidential.
Yep. Okay. Now, that sounds noble, and and the director Richard Cordray, he came out and said, "This is giving power to the consumer. They can voice their complaint in a public forum and all this stuff." Okay. So a person goes out and complains that my lender did this or whatever. All right. Well, their own statistics at the CFPB have found that most of the complaints are all resolved. It's like over 95% of them are resolved with no action taken. It was basically frivolous complaint. It didn't affect. It wasn't a material issue that resulted in, hey, this person needs to get compensated, or the lender simply was able to take care of it. It was resolved peacefully. Put it that way.
Right, or many times the complaint's not legitimate.
It's not a legitimate complaint.
The borrower or the
I
consumer,
didn't like it.
The consumer feels wronged,
Yeah, as a consumer, I didn't like it, but
but
the
I got
lender-
denied for my loan,
Nobody did anything wrong.
but nobody did anything wrong.
Yeah.
In fact, some loans have to get denied.
So now you make this complaints public, and the lender, they say, well, the lender can respond to it. Okay. In today's world, because of the CFPB as part of this, as a lender, can they go out and respond to a complaint in specifics on a public website and
confidentiality?
Say, you can't do it. So the lender can only defend themselves in the broadest of terms, and really will amount to they really can't defend themselves.
Yeah.
Against that
So for example, somebody goes out on a web to CFPB and says, a certain lender at the last minute decided not to close our loan. They didn't have a good reason. They're just a bad lender, and they let us on and didn't close. Then now, the lender can't come on and say, okay, 2 days before closing, you bought a brand new F-250.
Yep. So now your debt to income ratios are outside the qualified mortgage.
Right.
Yep.
And so you can no longer qualify for this. The lender cannot respond with that. The lender has to respond with something like, there were material changes in the application at the time the borrower.
Can they even do that?
I'm not sure, but it would be very ambiguous and innocuous, and even anybody reading it would not know what those things mean.
No. Yeah. The basic layperson is not going to know what that means.
Well, it would sound like the lender's actually giving them the runaround.
A runaround, exactly.
Right. Yeah.
No, well, if this goes through, would the lender have to feel like they need to respond to everyone out there? And if they do, that's more time that they're spending. We just talked about what Chase had to do as far as hiring compliance people. So this would be a compliance issue. That's time that compliance person's got to respond to this, earning, not a revenue generating.
Yeah, now you got to start documenting
thing.
all this.
You got to keep track of it, et cetera. Yeah. So, a noble idea, I guess, maybe. It gives the consumer a public forum to vent themselves, but really bad idea.
Is there a level of transparency that's just not good? I mean, we're kind of in this whole era of transparency now.
Yeah.
Where
is
there a level of transparency that's just
not
good?
I think so, because I think if the person really feels like they're wronged, there are avenues you can go to. It doesn't need to go out on a public website somewhere where everybody can go look at it. And then, it's just bad.
I mean, you want to protect the consumer.
I agree with you. There's too much.
You want to protect the
stuff.
consumer. You want the consumer to get information that legitimately helps them avoid bad actors.
Yeah.
But doesn't the information have to legitimately help them avoid bad actors? Not an accusation, but an actual proof they did something wrong.
I actually have something for you here along that line. But I agree with you that there are the transparency is probably getting too much. Now, in defense of the CFPB, here's something that they did good. What you were just talking about, that consumers should be protected from bad actors. CFPB, the Federal Trade Commission, and 15 states have brought action against 3 different foreclosure relief firms for engaging in deceptive marketing practices and charging illegal upfront fees. That's what they should be worried about, is hunting down people that are actually doing something wrong. Mm-hmm. In this case, where people are saying, well, if you pay me $2,000 or $5,000, we've seen this happen at our shop. Pay me $5,000 and I'll get you out of foreclosure. I'll save your house. Okay. And they take the $5,000 and they do absolutely nothing. They say, don't worry. Some of the scams are, don't worry about it. We'll take care of it. Don't make your payments until we tell you to make your payments. And the person never hears from them again. And in the meantime, they keep skipping payments. They won't talk to us because they think this third party is talking to us. Mm-hmm. So that borrower is not calling us and talking to us. So then they end up in foreclosure.
And the third party's in Tahiti with $5,000.
Yeah, and they do this to God knows how many people, and they walk away with the money. Or they'll get people to deed their house over, and then never make the payments, and it sits in it's the foreclosure process takes a year or something, and they collect the payments from the homeowner for that year, and they're done. And they've never So this stuff happens. That's what the CFPB should be doing. We haven't seen where somebody's making payments to somebody, but we've had the foreclosure relief thing where somebody paid an upfront fee to somebody.
Right, yeah, I've had that happen.
Yeah, But yeah, that has the other things happen, and that's what the CFPB should really be looking at, is stuff like that versus.
But if I got to defend myself every time a customer's angry,
yeah, you could get a complaint like this in a deal like this with this foreclosure relief thing. Well, the bank, I had this company who was going to talk to him, and then the bank apparently didn't do anything with him, wouldn't work with him, so now I've lost my house. Mm-hmm. Well, there's no way for the lender to respond to that. You can't provide the details for what happened. So it's just a bad idea.
It is.
Yeah.
Okay, well, before we get into our question about contract for deeds, we got by the numbers here.
Oh, okay.
Not a lot in by the numbers. We might go a little bit over the break with this one, but U.S. oil. Daily oil production in the United States in 2014 exceeds 8 million barrels, the highest daily total achieved domestically since 1988 or 26 years ago.
That's a lot.
That's a lot of oil.
It's a lot of oil. Okay.
Inflation, we care about that.
Absolutely.
Advanced by 2.1% over the last year and by 2.3% year over year the last 10 years. Not terrible.
Not bad. That's like the Fed's target, isn't it, for inflation? 2% roughly.
Now this one you like. Go ahead and read number 7.
Oh, number 7. What could happen? We have to keep in mind interest rates. We talk about it here weekly. Obviously, interest rates are great. They're low. They haven't changed much. We've got Bill Bodner, our seer, our guru of interest rates, saying rates are going to stay the same till 2020. But what happened back in February 1994 till February of 1995, the Federal Reserve doubled interest rates, raising short-term rates from 3% to 6%. So that could happen. Never know.
And if you could triple them now by going from 0 to 3.
Yes, you could triple them. Not just double. Yeah, exactly.
You could triple them by going 0 to 3 right now.
Yeah. So
and that would be that would have them.
Whoa.
Yeah. You'd eliminate the carry trade. There would be some impact.
Anyway.
Oh, here we go. Smooth. One of my favorites. Love Rob Thomas. Just love that whole style.
Yeah.
Matchbox 20. As we go into the break, Mortgage Talk 101 will be back. More by the numbers, and we'll talk about contract for deed questions.
Right now, it's 72.
Sean Hannity, weekdays at 2, only on SuperTalk 1270.
Stormy. I do love saying that. Okay, well, good news as we finish by the numbers is that most borrowers are paying. Most of them are paying. 13 out of every 14 mortgages in the United States were current and performing at the end of the first quarter of 2014, compared with 9 out of 10 at the end of the first quarter of 2013. So in just 1 year.
Way to go, people.
Way to pay your mortgages on time.
Yeah. All right. Good job.
Where do we spend our money?
All over the place. Where do we spend it? Social Security. What does it say here? Through the first 9 months of fiscal 2014, which started October 1st of 2013, the U.S. federal government has spent nearly as much money in Social Security disability payments, $108 billion, as it has spent in wages paid to military personnel.
Wow.
114. Ouch! I don't like that. That's not good.
And both totals are dwarfed by the $354 billion of interest paid on Treasury debt.
Oh boy, that's a lot.
So we're paying more interest on our credit card than we're paying for Social Security or the military.
Okay. Okay.
Wow.
All right. That's about it.
Okay, and benchmark. No, in order to maintain a household's pre-retirement standard of living and throughout a couple's retirement years, a typical American household should be saving 15% of pre-tax earnings. That's a lot of money for you, Dave.
Yeah.
This calculation assumes a retiring couple will receive Social Security benefits that the couple begins saving at age 25 and that the couple retires at age 62.
And boy, if you come out, as we talked about before, if you come out of college with a whole bunch of student debt,
how are you going to do that?
How are you going to save that much? 25.
Nostradamus.
The predictor.
Golf writer Gary Van Sickle predicted
yeah.
the week before the British Open that Rory McIlroy would win in rainy conditions and Sergio Garcia would win if sunny weather prevailed. In the field of 156 golfers that started, McIlroy won and Garcia finished in a tie for second, just 2 shots back.
And they had rainy and sunny conditions at the British Open. So that guy was pretty good, Gary Van Sickle.
Let's get him on the interest rate situation.
Yeah.
Where are they
Get
going?
him working. Well, even Bill Bodner could have a little discussion maybe.
Exactly. Let's get that thing ironed out here.
Okay.
Put a club in his hand and tell us where interest rates are going.
So we were talking. Jamie Dimon doesn't like FHA lending. Let's talk about that.
This is a big deal, folks, because Chase really. I mean, it's one of the big dogs out there.
It's too big to fail bank.
It is, and it actually on the government lending side, at one point over 50% of USDA loans were being sold and serviced to Chase.
That much, 50%. Wow.
Yeah, they had the largest market share of correspondent.
That dwarfs North Dakota housing. How much we bought? We bought a lot, but that dwarfs us. That dwarfs us.
And their correspondent portfolio, they had about 50% of and they also had a very, very aggressive FHA lending program from 2006 on
Absolutely.
up.
Yeah.
Sold a lot of business to myself. But now, so this is a big switch for the CEO of this company to come out and say, until they come up with a safe harbor or something, we're going to be very, very cautious in that line of business, Diamond said Tuesday morning during a conference call to discuss the bank's second quarter results. The real question for me is, should we be in the FHA business at all? We want to help there, but can't do it at the risk to JP Morgan.
So he basically is saying, I don't trust FHA.
Right.
It's bottom line, I think.
Bottom line is he thinks that there's he's a big risk there, and they are and FHA is certainly reducing its overall market share, and conventional is coming back anyway, but definitely is an important tool for achieving home ownership, and will continue to be in the future.
It's a big deal because, I mean, they're, like you said, they're buying a lot of loans through a correspondent channel, and it'd be a big important change.
And as soon as somebody like a JP Morgan moves off of it, hot lenders getting cut, hot off the presses, so to speak. Jim just came up with it. Jobs cut continues at Barclays.
Yeah. Oh, well, they're not picky enough.
That's, if they were a little more picky,
then
at Barclays,
they'd have their jobs.
Maybe that. So do you think that the lenders they're getting rid of are the ones that they don't feel could work at Goldman Sachs?
There we go.
Now they're saying salespeople, senior prime brokerage, possibly equity researchers, and oil and gas are the ones most.
Do you think this is a reaction to them being accused of not being picky enough?
I think it could be.
So they're
retaliation.
They're trying to increase the quality in the pool.
Retaliation from upper management.
We're not picky. We'll show you how picky we are.
Yeah.
Whop.
Yeah.
Job cuts at Barclays.
We want to get on the top of that chart at Hinge.
After Hinge report comes out that Barclays isn't picky enough.
All right.
That would be
anyway.
Okay. So
bad thing. No, bad thing with Chase looking at getting
reduces
out,
competition in the FHA market.
Yep.
See, these guys drive each other to compete for business.
Yeah.
So if you're Wells Fargo, U.S. Bank, Bank of America, if you're any of these other larger banks and you see Chase pull out, you don't necessarily go rushing in to pick up their. In fact, what you do is you go, oh, well, we don't have to be as aggressive there now either.
Exactly.
Which generally means higher costs and higher rates for borrowers, and lower revenues for the people who sell to them, like us.
Yeah.
And so when you have a big player make a move like that, it has it reverberates. It has shockwaves throughout the entire industry over time, and normally reduces the benefit to the consumer.
Yeah, there you go. Who gets affected at the bottom line? It's the consumer. You had a question about contract for deeds.
Contract for deeds. Okay, so here's the deal. A borrower wanted to be able to use. They're trying to qualify for a home loan. They've got a house out. They've got a house that they own.
Okay.
But they sold it contract for deed.
Yeah.
And they want to know, when can I use the income from the payments on my contract for deed to help me qualify for my new loan? Because let's say, for example, if you have a $1,500 house payment on the loan that you're selling contract for deed, well, now if you just got to put that $1,500 payment in your budget, your lender will go, well, you're basically making two house payments.
Yeah.
So can I use the contract for deed income that I'm getting? So let's say I sold a contract for deed and I'm getting $1,800 a month.
Yep.
Contract for deed. Can I use that $1,800 a month to offset expenses of owning this house to qualify for my new home loan? And the answer is yes, but. Yes, but.
Yes, but okay.
For sure on FHA you can, and I'm trying to get the conventional guidelines. I think that they're exactly the same, but we're going to run with the FHA guidelines here for now because they're the most conservative. But you can, but you have to file tax returns on that income.
Yeah.
And now the problem with that, folks, is if you're not watching your accountant with the best of intentions can wind up showing that you lost money on that contract for deed when you take all the deductions on it. And now that could wind up counting against you qualifying for a home loan. So you're going to want to be making sure that if you're going to wind up using your tax returns, and you're going to file this all on your tax returns, that you tell your accountant what your goal is so that you don't get overly aggressive with the deductions.
So it's basically, I've got a rental property.
See,
Even though I've sold it under a contract for deed, it's basically a rental.
Yeah, but here's the problem. On a rental, I can take the income from a rental immediately.
Yeah.
For a contract for deed, you have to have a 1 year history.
You get a history. Okay.
So that's why the tax returns are important.
Yep.
Now, if you haven't filed tax, now a lot of people, they do their own taxes. They don't realize that this is supposed to be reported as income. So some people don't do it. And so as a lender, what do you do if somebody comes in and they don't report this income? Well, you report them to the IRS immediately.
Oh,
no, you don't.
You
don't. You're just kidding, folks. The information you bring in is always confidential to your lender.
Yes.
But if they come in and they don't report it to their tax returns, now what you have to do is you have to show proof of receipts of the payments for a year. Mm-hmm. Now that's a problem too. That can get tricky. So if you gave me checks if you paid with checks every month, you got to get copies of those deposits. Mm-hmm. If they paid you cash, you got to show the cash deposits for the same amount as the contract.
Yeah.
Well, here's what happens, folks, and don't do this. You get your renter pays you in cash, or your contract for deed purchaser pays you in cash.
Yep.
They give you $1,500 or $1,800.
Yep.
Now, what a lot of people do, they'll deposit $1,000, keep $800.
Yeah, that's my spending money.
Well, now there's no proof that full accurate payment's been paid. There's no way to track that you were making that money on the house.
Yep.
And so it's very important when you get into these agreements. And remember, on a contract for deed, what you're agreeing to, it's not a rental agreement. Like
it is different.
You are playing the bank.
Yes.
You're saying, I'm going to bankroll you, and you're taking the payments like a bank would on the house. Keep very clear, accurate, exact records on that, because you're going to need them for a year before you're going to be able to use that income to offset and qualify for your home.
Great point. Yeah. There's a lot of particular intricacies with some of this stuff, and you know, before you enter into a contract for deed with someone, you need to find that stuff out.
And couldn't you see this winding up on the CFPB complaint website?
Absolutely.
So you come in, you tell your lender, I kept all the records, I've got all the records. Finally, you get all the records in, and there's one payment that's $500 short.
Yep.
You're turned down.
Yeah.
And all of a sudden, my lender turned me down. He told me he could do it. And sure enough. Yeah. How are you going to explain that as the lender rebuttaling?
Yeah, you can't.
You'd never be able to explain.
Yeah.
All right, well, thank you for tuning in to Mortgage Talk 101. Next week, we're here. We'll have all kinds of information. I'll be at a big conference. I'll come back with lots of information. Okay, and after that, North Dakota Association of Realtors are going to come on and talk about the transfer tax. Folks, that's going to cost people a lot of money to sell and transfer their homes in the future if that gets passed. You're going to want to hear about whether that's good or bad. North Dakota Association of Realtors will be on to explain their position 2 weeks from now.
All right, cool.